Good evening and welcome to the Audit Committee. We've all got our names in front of us, so when you speak, you can always introduce yourselves. Apologies for absence. We've got apologies from
Councillor Paduma Mohammed.
okay, and we've got Tommy online, and you can hear us, Tommy?
I can. Good evening.
Oh, good. Urgent matters, there weren't any, no urgent matters. Any declarations of interest, anybody? No, none of us. Matters to be considered in private, none. And can I sign the minutes of the last meeting, of which I'm afraid I wasn't at, but those of you that were, if you think there's anything incorrect, please say. No, I'll sign those and give them over to Keith. And I know you've already seen them, haven't you, all of you? Right, there you are, Keith, those back. Thank you. And so that brings us on to the first item, which is item 6, and I think that's Emma.
Yeah. Right, okay, so item 6 is the Treasury Management Q1 update for 23-24. This report provides an update on the Council's borrowing and investment activities. So a few key points. So over the reporting period, Treasury Management, they've all been carried out within the approved limits. A couple of key points just to highlight is there was no additional long-term borrowing raised during the reporting period to the 30th of June 2023. The existing long-term debt fund capital expenditure has increased slightly from 877.532 million to 876.32, an increase of 100.1, in the amounts. This is on behalf of Mortlake Crematorium, so not additional long-term borrowing. The council earned an average investment return of 4.265% on short-term investments, underperforming only slightly against the rolling average SONIA rate. This is due to investments that we've held over a longer period of time. So they were investments held prior to when the increases in the interest rate started rising. Therefore, they will, as they mature, we will start getting the higher interest rates if they continue to stay higher. There's no additional key points that I think need to be raised, but if anyone does have any questions, obviously I'm open to those now.
Any questions to Emma on this report, anybody?
Yeah, I believe last year we took out some capex loans and we did invest them at quite a favourable rate. Are we still getting a decent rate in return on those?
Yes, we are. So as we've as we're with the investments, we normally use the term cost of carry, but thankfully when we took out the loans, they were at a lower interest rate. They haven't been spent in full just due to cash flows and timelines of capital expenditure, and therefore we are getting better rates, and we have quite the opposite to cost of carry at the moment. So we're doing very well on those.
No, so can we note that report? Thank you, Emma. That brings us on to item 7, which Emma's going to.
So item 7, the purpose of this report, this is the report outlines the council borrowing and investment activities. This is for the financial year ending 31st of March 2023. During the financial year, all management activities have been carried out in accordance with the approved limits. It's recommended that they note the Treasury Management activities performance against targets for the period. Note the council's investment balance of 506.836 million. So the 31st of March 2023, and the prudential indicators set out in Appendix 1. Happy to take any questions on the reports or the appendix.
Any questions for anyone? No? No? Okay, we'll note that report as well, and thank you for that, Emma. And that brings us, this brings us on to our external auditors. Jonathan and is it Dina? Dina, right. Okay, over to you. What we'll do is
Okay, great. Thank you very much. Good evening, everybody. So we've got 4 reports in the pack today. One is a report to the Audit Committee on the 2021 audit of the Council. One is a report on the 2021 audit of the Pension Fund. We also have a draft report called the Annual Auditor's Report, which remains in draft until the point at which we sign the accounts. That's here for your information. Happy to take any questions on it, but essentially the Annual Auditor's Report summarizes what is in the first of our reports on the 2021 audit. So I'm going to focus on that report. There's also a status update or a position statement on the 2022 audit, which I'll touch on as well. So if I start with the report to the Audit Committee on the 2021 audit for the Council, which is on page 91 of your pack. So the report sets out the scope of our work, the findings from our work, the significant audit risks that we focused on, the status of the work, and the misstatements and control recommendations that we've made. The first page of our report sets out the status. There's a small number of items that are in progress, but we're substantially complete, and this report sets out our findings from the work. We'd anticipate completing the remaining procedures in the coming weeks, but we are essentially complete. Since the last meeting and since the draft reports were presented, since the draft accounts were presented for audit, we've summarized within this first page some of the key changes that have been made to the accounts, which relate to fair valuation of borrowings, misstatements in relation to property valuations, and changes to the accounts with respect to infrastructure. Page 94 of the pack sets out further details of the status of our report and the reasons for the extended period over which the audit has been conducted. Those include additional work required in respect to value for money, delays in provision of information and disruption to the council as a result of the pandemic, additional work in respect of infrastructure assets because of changes in the requirements for audit and preparation of the accounts in that area, the quality of the draft financial statements and supporting working papers, together with the impact of control deficiencies that we've identified, as well as areas considerations in respect to the housing revenue account, valuation, as well as matters with respect to the fee for money work is set out within the report. We identified 2 risks of significant weakness in arrangements of the authority. One of those we concluded was a significant weakness, and one we concluded was not, and that was in respect of health and safety, and I'll come on to that in a moment. We anticipate issuing an unqualified opinion on the accounts, with an except for on the value for money conclusion, which relates to that health and safety matter. Our work in respect to the subsidiaries of the authority is complete and was completed some time ago. We've not received any objections in respect to the accounts, and there are no matters that would require us to produce a report in the public interest. Page 98 to 105 of the report covers our significant audit risk areas. The first of those is in respect of the recognition of COVID grant income. We concluded satisfactorily in that area in respect of the recognition of the income, but identified disclosure deficiencies and control deficiencies. The second is in relation to property valuations. We identified a number of control issues. We also identified that 2 schools have been carried at cost rather than valuation, and the revaluation of those increased the value by about 74 million. We identified a significant risk in respect of management override of controls. Our testing was satisfactory, but again, we identified control recommendations, and we identified a significant risk in respect of capital expenditure. And again, we concluded satisfactorily in that area, but identified control weaknesses. Page 108 to 114 of the report set out the other areas of audit focus. Those include the pension liability. We identified errors in the disclosures and understand that those have been amended. We focused on group accounts, and our work in that area is complete. As I mentioned before, infrastructure assets was a sector-wide matter where there was additional guidance that was released and changes were made to the accounts in respect of that. There are further details within the report around the HRA valuation, including to do with changes in the value from the start of the year. We've also made recommendations around the timing of valuations rather than doing them at the point at the start of the year, doing them later in the year. And as I said before, we identified a misstatement in respect to the fair valuation of debt because of a more accurate method that was available for determining that disclosure. I would draw your attention to the schedule of misstatements, which is in the appendix to our report, as well as the control recommendations that we've made from page 123 onwards. There are a number of high priority control recommendations there that I'd recommend that the committee seeks assurance on the implementation of those in future meetings. I think I'll pause there and hand over to Dina to cover the pension fund report.
Hi, my name is Dina and I'm audit manager on the pension fund audit. The report is on page 149 and subsequent of your pack. Page 151 sets out the audit scope. Our audit is substantially complete and subject to receipt of signed representation letter and the satisfactory completion of our post year-end review, we anticipate issuing an unqualified opinion on the pension fund accounts. If we move to page 155 of your pack, we set out the materiality. Our materiality was set at 1% of the net assets of the fund, with a reporting threshold of 5% of the net assets. We have identified one significant risk, which we cannot rebut under ISA 240. That's management override of controls. For this risk, we focus on testing of journals, and we have interrogated 100% of the journal's population using Spotlight, which uses intelligent algorithms to draw out items of higher risk and unusual items. Our testing was satisfactory. But I do note that there were some control deficiencies which were noted. Then the next one is an area of audit focus, not a significant risk, but first one is completeness, valuation and presentation of investments. This is mainly due to the prominence in the financial statements of the investments, it being the largest balance. We focused our testing on the more complex areas of valuation. Our conclusion is that we have not identified any issues, and we have reconciled the investment to both custodian and investment independent investment manager confirmations. The next area of audit focus is the completeness and accuracy of contributions. Unlike a company pension fund where there is a separate audit opinion on contributions, this is not the case for local government schemes. However, contributions are scrutinized, and due to the complexity of the schedule of rates and adjustments, this is considered an area of audit focus. Our our testing was satisfactory and we haven't noted any major issues. I draw your attention to page 161, which summarizes some of the controls findings and disclosure deficiencies that we have noted.
Okay, so the third report I was just going to touch on was the audit status for the 2022 audit. We had a team in place across the summer working on the 2022 audit. It's progressed, probably about 50% complete. It did not progress as quickly as we expected it to, and we're seeking additional resources to complete that. Not proposing to go through the fourth report, which is the annual auditor's report, as it's a summary of the first report that I talked through. Happy to take any questions.
Thank you. Now, I think sometimes some of the things mentioned here have caught up. So would officers like to talk about health and safety and housing?
Yeah, so I think that's right. I think one of the key findings from Deloitte's work is the work on the value for money conclusion, for which Jonathan has been through, and I think that we certainly agree with the conclusion that was made on the except for basis. I think it's just important to note to the committee that this was arrangements in relation to 2021, and it's rightly reported as 2021, and that weakness was in place. There has been significant work done by the council since then, and hopefully that will then be reflected in the 21-22 VFM conclusion and the 22-23 VFM conclusion. The Deloitte report picks up particularly for example, the reporting self-referral to the regulator in relation to the matters that they've also reported on, and we're working through that action plan and hope to come to a position where we can unrefer ourselves from the regulator very shortly. So agree with the work that the auditor's done here. I think it's just important to note that this was in relation to arrangements 2 years ago that have since moved on.
Thank you. Thank you. That's helpful. Tommy, you've got your hand up. Go ahead. Tommy, your hand's up. Would you like to speak? Ask a question? You're on mute.
Sorry, I was unable to get off mute. Thank you for that report. I kind of wanted to refer to what Jonathan was referring us to on page 123, the sort of significant findings where recommendation is for us to get assurances in subsequent meetings. I wonder whether we can either agenda that or ask for a report outside or something from assurance. Quite a few of those we've seen before, and I think the response previously was management will just carry that risk that's flagged. And it's good to see that audit findings are concluding there wasn't anything actually found wanting, apart from a weakness in the control itself. But some of those are new, and we've got new management, so I'd welcome kind of an assurance report on that. Thank you.
Thank you. That's helpful, Tommy. Obviously, that's why I called in Emily, because the housing's been sorted out now. There's some other things here which may have been sorted out. Let's hope they have. Perhaps we could have a very one-page report at the next meeting telling us, has everything been sorted out that's been highlighted? I know Gary's nodding. Emily, did you want to come in?
So I think that's absolutely right and correct that you should ask us to update your recommendations. We can certainly do that on progress. I think I would just sort of flag that just because of the timing of some of these things, we've already prepared the 22-23 financial statements in advance of some of these conclusions. So there will be some places where sort of time's already moved on. Certainly by the time we get to 23-24, we'll want to have all of these things in place. But just because of the timing of issues, particularly around year-end processes, we're almost too late now to put those in place sort of for the 22-23 financial statements. So I don't think we disagree with the recommendations themselves. Just some of them will be difficult now we're going to have reports potentially of them being reiterated in 24 21-22, which is in progress at the moment, and 22-23, just because of the timing of receipt of some of these, wouldn't have allowed us to do it by that time. Having said that, a number of these, as you've said, Tommy, have raised before that now, and we should have taken those into account, or we should explain why we haven't. But some of them just through the nature of timing. But I mean, we absolutely should do that, and we should be bringing back sort of an update on where we would implement those recommendations.
That's very helpful, thank you. And the schools issue, I believe, has been solved, the 2 schools. So that was just something that now been solved. Is there anything else, Gary, that you've noticed?
Well, I mean, I've got a couple of different questions. One of the questions is actually Tommy and yourself, Councillor Johnson, have asked, which has took the wind out of my sails there a little bit. Just like a schedule of what's been done, Emily, in terms of that respects what you've just mentioned, it'd be good for the next meeting, or even before the meeting. That would be great, but I understand how busy you guys are. Shall I go on to asking? So one of the questions is I was wondering about if it's possible to get hold of the health and safety report for Percival House at all.
We did have it at the Victoria Hall meeting last week. So we sent it to Councillor Ball, didn't we? Or Helen did.
I don't know.
Anyway, we'll ask Helen about it and probably get it sent to you if you want to. Sorry, yes, go on, Emily.
Yeah, did you mean Ealing Town Hall rather than Percival House? I think you said Percival House. I think you meant right. Ealing Town Hall. And so yes, absolutely. I understand that has been shared with councillors already, but I can certainly pull that out and resend it to you just to make sure it's at the top of your inbox.
Okay, well, before you do that, I'll ask and see if it's been sent to us, and then we're not, like duplicating things. So I'll see if it's been sent to us, and then if it hasn't, then I'll just ask you by email. Is that okay?
I'm fairly sure it went to Councillor Ball because he asked for it last week. But yeah. I'm sure there's nothing secretive about it. I mean,
just one last thing. The asset register for council assets, are you happy with the valuations? It's not a trick question. It's just either, yes or no.
So our conclusions with respect to the valuation of the property for the 2021 audit are as set out here, and we anticipate issuing an unqualified opinion such that we're comfortable materially on those valuations. Okay. In accordance with the requirements for accounting standards for preparing the accounts.
Thank you very much.
And as we were saying, the update, it doesn't have to be long. It could be a page telling us where we are with certain issues. It's not a great big long thing. We just want to know, have these things been done, in progress, been done, expected to be finished. That's the idea, just to make sure that we are doing all those things. And I was going to ask you about the property, but you're quite happy about it, as far as one can be happy about the property. Sorry, our own property holdings, some of them, because of big offices and things, the value of those have gone down. So there's sort of things change all the time in the property world.
Yeah, no, I mean, it's a point in time valuation prepared by your valuers, and we engage our valuers to audit them. I said there are a few things that are outstanding. There are a small number of things that we're just following up on, but not that we would anticipate being material.
Thank you. Is there anything, officers? Yes, Emily.
Just to say, I think the key in the material adjustment that auditors have identified in relation to the two schools that you've set out, and those have been amended in the final statements. Obviously, the audit team need to go through and check and be happy that we've made those amendments, but we've accepted them and made those changes in relation to the material valuation points, have they?
Thank you very much. So thank you for all that work, and you expect everything to be signed off within a couple of weeks, you say? Let's hope that happens. And no, thank you for that. And that's good. And obviously it was a difficult period with COVID and everything else, but and lots of changes of officers, etc. But thank you. Thank you very much for that. And do feel free to go. You know, you don't have to sit here while we go on to the next couple of things. So it's up to you. Are you right there, Tommy? Yes, he is, I think. Okay. That takes us
Yeah,
on to
thank you.
item. Yes, thank you. That takes us on to item 9, which is an update from you, Mike.
Thank you, Chair. This is my usual audit and investigation update. It's item 9 on page 171. So one report was issued as final during the period. That was the housing, health and safety, which kind of looked into some of the issues raised from a couple of years ago and follow up to check on progress. So a reasonable assurance, but I think it was important to kind of reflect that one, that it's gone into a much better position and closed down a number of the recommendations from previous years. Moving on to the follow-ups. So as you'll recall, last time we had a number of items, 19, I think it was, in fact. We're now down to 7. I'm pleased to report that the contract item has now been signed off. The remaining items in relation to HR, I think as we said last time, there was a new director of HR coming in. I've met with them, had regular contact with them to make sure that these are progressing. Not only are they progressing, she's very keen to make sure that they are moved on. So I'd expect that they would be cleared on or significantly progressed by next time. Utility work is progressing. Again, I'd hope that we'd be in a good position by that in January, but I'm keeping a close eye on that one. Moving to the fraud side of things, great stats for Q1. We've been doing some really good work with the team that looks after waiting lists, which has resulted in a number of people being removed from waiting lists, and ultimately that helps protect properties for those with a genuine need. There was also one direct payment case where our interventions helped to prevent an annualized cost of 70k, where somebody's getting cash to deliver services that weren't actually required. Any questions on that report?
Can I ask what this actually means? I can guess. Staff member has resigned following dual working investigation. Perhaps you could put that in normal English.
So essentially, we identified a case where somebody had 2 employments. Having undertaken some initial investigation, the member of staff resigned from their Ealing post. And there wasn't enough of a concern to lead to a prosecution. So essentially we took the resignation and it's kind of dealt with it from the council's perspective, and there was no.
So they were working here under one name and working somewhere else under a different name?
No, they were working at 2 places under the same name. But essentially, if it's the case I'm thinking about it, they could have 2 employments, but I think they were doing something like 18-hour days and sometimes going from one employment to the next employment. I think they'd almost exceeded even that. So practically, although it was possible, it was unlikely that they were actually achieving that, and essentially when questioned with it, they decided to resign at that point.
I was guessing it meant something like that, and I thought, goodness, it's like if you're driving, you can only do so many hours, and I suppose with working from home, you don't know what people get up to these days. Not saying that people shouldn't work from home, but no, I understand. Thank you. Any other questions from anybody on this? Then, and then that takes on to item, sorry, I'm turning over the pages, item 10, and we're going to do lots of new things. I'll leave it to you, Mike. Go ahead.
Thank you, Chair. So this report is compiled by me on your behalf. So it's my perception of, I think, where you are. So in 2022, SIPFA released a new elevated standard for committees. So we didn't expect we would be perfect against it because it's kind of raised the bar. Pleased to say, based upon my scoring and interpretations, we hit 78% compliant by undertaking the skills and knowledge assessment, which you all completed. That has raised it to 85%, as long as you're in agreement with what we've done there. And then there's a couple of measures that essentially would bring us to fully compliant or somewhere in between. But I think we're at a good level, and it's important to say it's recommended good practice rather than kind of statutory requirements. We've made recommendations. So the self-assessment in full is detailed in Appendix E. The kind of areas where we weren't fully compliant and recommendations falling out of that is in Appendix A. And essentially we've made recommendations. One is around, are you happy that my interpretation reflects your own understanding of the work of the committee? And then essentially there's some recommendations which we feel we should adopt in line with a good practice. And then the other areas I think we should at least consider and be either happy to accept the risk of not doing or just do it. So essentially the recommendation set out in two parts, and essentially asking members to assess whether this report reflects that, and then ultimately this report will go on to full council, which the chair will present to them, which is an opportunity for them to kind of challenge and question the work of the committee if they so choose.
Thank you. Tommy, go ahead.
Thank you. Thanks for that, Mike. So I'm looking at the table in page 189, which I think you've sort of inserted to say this is the bit for discussion and evaluation as well. And I'm conscious that, you know, as a committee member, it could sound a bit defensive on some of the evaluation here, but hopefully you sort of taken the spirit. But the key indicators of effective arrangements, I notice in a few of those, there's a bullet around the head of internal audit's opinion on governance being satisfactory. I just want to sort of question and open a discussion really on, do we always expect everything to be satisfactory and perfect? What I don't want that to end up doing is inadvertently driving a behavior of don't look in the high risk areas because we need to get satisfactory. I think we deliberately ask you to look at the riskier areas and do a risk-based approach. For me, a true indicator might be we actually listen to what you're saying about what you're finding, and we hold management accountable to do something about it. That would be, and you feeling satisfied that your recommendations and actions are taken seriously. I don't really expect you to say everything's good, satisfactory or perfect anytime really. A different question when it comes to core financials, but I think rest of the organization, it feels a sort of unfair judgment call or standard to be measuring us on, I think.
Thank you for that. I think as it says in the report, you can see that we are going to call managers in if we're not happy. So we are going to hold people to account. And you're quite right. Things are not always going to be perfect. So that's part of what we're here for, to try and improve things, see if there's something that we can do. So you're exactly right. I think I've talked to the officers, and we're going to try and have more training, because we need to know what to ask and so on, and we need to keep up to date with what CIPFA is saying. We're going to change our terms of reference to fit in with CIPFA, and we're going to get another person to join you, Tommy, another independent person. So there'll be two of you, so that will be good. Officers, do you want to come in on this?
Thanks. Yeah, I'd probably echo what your challenge there, Tommy. These are key indicators as set out by the standard. And I think when I kind of looked at it, I agree. I think the kind of evaluation is that we are getting a limited, we have had a limited opinion, and I think you've raised questions in that respect. I agree. I think probably the bit that will bring you into fully met is bringing officers in on occasion to kind of challenge around that. So I felt quite happy that you were meeting the standard, and I think it's right to kind of challenge what the standard says about actually, you know, should we just roll over and make sure it's satisfactory in order to get ourselves the kind of full marks on that. So I'm happy to update or change if there is anything on that, but the key indicator, and I think it's probably worth emphasizing, that is what SIPFA set out in their standard rather than what we've set out as an effective arrangement. If that makes sense.
Please come back, Tommy, if you want to add anything.
Yeah, so I think that bullet then, if it's the third column, is not, you know, language we've put in. I think the spirit of that is probably that you, Mike, are happy that governance works rather than your head of an audit opinion being limited. Because I think they're two different things. It's specific about annual opinion on governance. I think that's different to the whole AGS or your annual opinion statement. If you think the governance of this process works, I think that's different. And in terms of the point about holding management to account and asking them in, I guess it's useful if as part of my producing his audit report, we can identify those areas where we would like to hear directly from management, so that it's at the same meeting rather than having to wait another quarter before talking about something that's quite old news for audit's perspective. So it's all part of the agenda setting.
I think so the offer for people to be invited in is there every meeting. I think when you're in receipt of papers, something that we've been talking about at Hounslow, and each committee does it differently, is potentially just rotating officers and getting them to talk about more generally how they kind of get their assurances and give that. So maybe individual SLT members and stuff. So I'm happy to have a chat with the chair about kind of how we might best do.
We changed the wording a bit to fit in with what Tommy suggested. Mike, perhaps you and Keith could look at that wording, sort of alter it slightly. Is that possible? Is that okay? Anything else on this? No? Are we happy with that then? And we'll adopt those recommendations, agree them. Happy to do that? Yes, thank you. And then that brings us on to item 11, which is the work plan, which I think you agreed perhaps earlier. Is there anything on the work plan that anyone wants to ask? No, so as long as we keep up to date with that, and if we don't, we'll want to know why. Thank you, and thank you very much. Thank you. Well, one time I've forgotten something. Next meeting. Date of the next meeting is the 7th of December. Is that right? Right? Thank you. Thank you very much. Thank you.
Thank you.
Just to say to you that the next meeting will have risk management on the actual agenda, and it'll be open. It won't be in private. It will be there. We haven't got it this one, but we'll have it at the next one. Okay. Thank you.